The banking regulator says it's worried about the outlook for home borrowers. Hospitality businesses are failing at the fastest pace ever, and Deadpool and Wolverine's record opening 3 days, selling $438 million worth of tickets. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 30th of July, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the banking regulator remains worried about the outlook for people repaying their home loans, telling lenders like the big four banks to maintain a 3 percentage point serviceability buffer.
Yeah, so that's the amount above the advertised rate that new borrowers must be able to afford to repay. So if someone takes out a home loan on a 7% interest rate, the bank needs to go in. It takes into account the 3 percentage point serviceability buffer, and it means the banks need to make sure that the borrower can repay a 10% loan. It's a lot of money. The APRA said in reaching its decision to maintain the relatively high buffer, it took into account the uncertain interest rate and economic outlook with high levels of household debt and inflation still above the Reserve Bank of Australia's target range, as well as ongoing geopolitical instability. Balancing these risks, APRA said, was the quality of new housing lending remained sound, and arrears rates on mortgages and business loans continue to rise only slowly, and they're still actually below COVID peaks. The Australian Prudential and Regulation Authority also said credit growth for homes is now below the long-term average, while business credit is above historical norms.
Sean, is 3 percentage points too much, given that interest rates aren't expected to rise much more? If they do rise, it's not going to be a huge amount. Is that going to be too much?
Perhaps. It does make it harder for people to get a home loan, particularly those on lower incomes. And given the interest rate cycle's turning, as you mentioned, it does seem to make a lot less sense now than perhaps a couple of years ago when rates were very low. Like I locked in a rate at 2.29%, 3% buffer. They said, hey, Sean, can you pay 5.29%, which was fine. If I locked in now at 7%, can you pay 10%? It just seems like there's a really big penalty involved. Having said that, if the economy goes into recession, then lower income households could suffer most. Certainly, these tighter credit standards could help slow the housing market. Price growth is definitely slowing, and we'll find out more about that at the end of the week when the full month of July data comes out. But auction clearance rates remain pretty good. Over the weekend, the preliminary clearance rate nationally was up 1 percentage point to 72.2%. Sydney led the way there. Actually, Adelaide led the way. It always does. It had like an 85% clearance rate, but otherwise it was Sydney. We'll know more about prospects for the housing market and whether the regulator's been too cautious in its mortgage serviceability buffer. Probably after tomorrow's inflation data is released. If that's a high number, then maybe it does make sense to keep that buffer at a sort of 3 percentage points. If not, you wonder why it's still so high.
Speaking of the inflation data tomorrow, Sean, tomorrow is, of course, Wednesday, and that is the Fear and Greed newsletter day, which usually comes out kind of 10:30, 11 or so in the morning, but it'll be a little bit delayed tomorrow morning to take into account the inflation data. You can't get much fresher than that, can you?
No. I think it'll be out by about 10 to 12. The data comes out at 11:30, and I'll certainly be having my say on what I reckon the data means and what it means for interest rates, plus plenty more.
Indeed. So you better get onto the mailing list for that one. Head along to fearandgreed.com.au and pop your email address in. And when that newsletter hits the what? The airway? That's the press? What's the equivalent of
the inbox?
Yes, I suppose so.
Maybe.
Head along to fearandgreed.com.au and put your email address in, and it means that you will get that newsletter. It comes out every week, and you will be one of the first to receive it. And here's Sean's thoughts on what the inflation data means for interest rates, so don't miss out on that. How did local markets perform yesterday, Sean?
The S&P ASX 200 closed up 0.9% to 7,990 points, with tech stocks leading the way. Though they had plenty of friends, telcos and real estate investment trusts were also outperformers. Among the large caps, the banks were mixed. National Australia Bank and Westpac jumped sharply, while ANZ fell more than 1%. More on Commonwealth Bank in a moment. Goodman Group was up more than 2%, as were Aristocrat Leisure and WiseTech Global, while REA Group was 3% higher. The Star Entertainment Group had a lot of friends yesterday, or maybe one rich friend. It was up 15%. No corporate news there, just its share price surge, something going on. In corporate news, Viva Energy, think Shell and Coles Express, said first half earnings will be up on a year ago. Notwithstanding sector-wide softness in parts of its business, fuel sales are up nearly 6%, though convenience sales were lower. Its share price jumped more than 4%, one of the best of the top 200 yesterday. The boss of NIB, Mark Fitzgibbon, he announced his intention to retire. Interesting timing there, given that the health insurer is in the midst of a battle with private hospital group St Vincent's. Gold producer Ramelius Resources announced record gold production for the June quarter. And worst of the top 200 yesterday was Fletcher Building after announcing another earnings warning.
And what about international markets?
Well, the US Federal Reserve is this week expected to set the stage for lower interest rates later in the year, while the Federal Open Market Committee is expected to again hold its benchmark interest rate steady at a 23-year high of 5.25 to 5.5%. The meeting on Wednesday is expected to set up the case for a rate cut in September. Otherwise, oil is steady. Brent's fetching just under $82 a barrel. Gold's trading slightly below $2,400 an ounce. And the Aussie dollar is buying 65.6 US cents.
Sean, you've got a great chat coming up after the show. You're speaking with Niall O'Sullivan, who is the Global Solutions Chief Investment Officer at investment giant Mercer.
I certainly am. We have a great chat to Niall about, well, particularly about what the elections around the world mean for markets and means for investing. The US is obviously the big one there, but there have been plenty of other elections around the world, particularly places with huge populations, Indonesia, India, Iran, the UK. So we talk about all that and what the whole geopolitical atmosphere means for investors.
Yeah, it's a great interview. It is coming up after the show. And coming out at midday today, Sean, is the next bonus episode of Ask Fear and Greed, where we take a listener question and, well, do our best to answer it. Well, you really answer it. I just ask the question. And sometimes I interject and add little value. But if you have a question that you would like us to answer, you can send it on through via the website, fearandgreed.com.au, or head along to any of our social media platforms, Instagram, Facebook, LinkedIn. Send your question on through there, and yours may be the next one that we answer. Sean, we've still got a bit to get through. We'll be back in a moment with the rest of the day's business news. Sean, National Party frontbencher Barnaby Joyce is in hot water for using a gun analogy to encourage voters to get rid of Prime Minister Anthony Albanese. This is not in the best taste.
No, he made the comments at a protest against an offshore wind zone in the Illawarra. He said, and I quote, "The bullet you have is that little piece of paper, and it goes in the magazine called the voting box, and it's coming up. Get ready to load that magazine. Goodbye, Chris," as in Bowen. "Goodbye, Stephen," as in Jones. "Goodbye, Albo," end quote. After it emerged, Mr. Joyce apologised, while his leader, Peter Dutton, said the apology was enough and appropriate. Mr. Albanese was less forgiving, saying he should be cut from the front bench, saying the comment was completely unacceptable and the language has no place in any part of Australian society.
The noise around Barnaby Joyce yesterday distracted attention from the swearing-in ceremony at Government House.
Yeah, it was one of the first public official duties of the new Governor-General, Sam Mostyn. Tony Burke was the big winner from the reshuffle. Yesterday, he was sworn into the Home Affairs, Immigration and Multicultural Affairs, Cybersecurity and Arts portfolios. Plenty there. Murray Watt got Employment and Workplace Relations. The Prime Minister moved Andrew Giles from Immigration and Claire O'Neill from Home Affairs. Yesterday, he was forced to defend their performances. And then along came Barnaby Joyce, and that all seemed to fade away, and all the focus was on what Mr. Joyce had said.
Now, Sean, I mentioned this one at the top of the show. Hospitality businesses failed at the fastest rate on record last financial year as rising food and energy prices and a pullback in consumer spending pushed cafes and restaurants to the wall.
Cafes, restaurants and small retailers registered disproportionate growth in insolvency appointments in the past year, according to a report in The Australian, as consumers were forced to pay more for essential items and pulled back from discretionary purchases. Figures from the Australian Securities and Investments Commission shows the number of collapses in the sector jumped 50% to a record 1,667. We are talking about the last financial year ending June 30. Retail appointments surged by more than 40%, and total insolvencies were up 39% to just over 11,000. Now, that 11,000 figure is a record, but it is much more like normal pre-COVID numbers, a bit higher, but not sharply higher. Now, thanks to all the government handouts during the pandemic, insolvencies fell sharply in the 2021 fiscal year to just over 4,000, less than 5,000 the year after. Surprising given we're in the middle of COVID. ASIC also said there were 3.38 million businesses now registered in Australia. That's at the end of June. 12 years ago, there was 1.88 million, so it means we've, well, not quite doubled, but nearly doubled in that 12-year period.
That's significant, isn't it?
Yeah, I was really surprised by how fast it's grown.
That is huge. Now, Sean, this next one, I suppose, is a bit of a worry, really. Australians are still dying at higher rates than before the pandemic, suggesting that COVID-19's lingering effects may be driving a sustained increase in death and disease.
Excess mortality, the increase above the expected toll had the pandemic not occurred, was 5% last year, according to the Actuaries Institute. Now, the figure is significantly higher than the 1 to 2% excess seen in the years of strong seasonal influenza epidemics, according to a report in Bloomberg. Australia has relatively high COVID vaccination rates, but still, the many survivors have lingering ailments. For example, more than 4 years on, hospitals are still experiencing an unexpected increase in coronary artery disease. The local findings support growing evidence that COVID-19 worsened health across populations, especially the elderly and marginalised racial and ethnic minority groups, resetting the baseline for expected mortality.
How about this, Sean? Commonwealth Bank's share price closed at a record high of $134.90 yesterday, really denying the naysayers who argue that the country's largest company is overvalued.
Almost all the major bank analysts, these are investment analysts, think Commonwealth Bank's share price is too high and they expect a correction. But investors aren't listening. And it seems overseas investors in particular aren't listening. And the group's share price just keeps rising. It's up around 40% since October last year and is the main reason the ASX 200 has performed so well recently. On top of that, investors, of course, have been receiving dividends. Great return for people who got in back in October. A couple of weeks ago, Commonwealth Bank became the largest company on the ASX. It's now about $11 billion bigger than BHP, the number 2 company. It's nearly twice the size of the next biggest bank, National Australia Bank.
Another hot company at the moment is James Hardie Industries.
Hardie's business is focused on the US construction industry, and while the sector hasn't exactly boomed, expectations of lower interest rates has helped the group's share price. It jumped 3% yesterday, but in the last 3 weeks, ever since US inflation figures came in slightly weaker than expected, Hardie's share price is up 20%. Pretty phenomenal.
On the flip side, Sean, Kogan.com's share price fell 1% yesterday after its fourth quarter trading update showed sliding traffic to the site.
We haven't really looked at Kogan for a while. Of course, it was a darling of the COVID period. Yesterday it came out and said gross sales were down 1.5% while earnings were higher during the fourth quarter, the June quarter. It said for the full year, which it will announce next month, earnings will be around $25 million from last year's loss of $10 million. All that is good. As part of the update, the retailer said its Kogan First loyalty program hit more than 500,000 subscribers for the first time. While profits are going in the right direction, investors are concerned about the competition in the sector. There's plenty of it. Think Amazon, eBay, Temu. Kogan's share price closed yesterday at $4.31. Now, mid-COVID, it was closer to $25. It fell as low as $3, then picked up, and earlier in the year, about March, it was closer to sort of high $6s, $7. It's more than halved since then.
Turning to international news now, Sean, this is quite incredible. Democrat presidential nominee Kamala Harris has raised $200 million for her White House bid in less than a week, which her campaign has called a, quote, record-shattering haul.
And about 2/3 of it came from first-time donors. That's what's pretty incredible about it. Now, Harris needs to boost fundraising to make up for the slowdown in donations to President Joe Biden after his disastrous debate performance against Donald Trump in late June. Harris raised more in a week than Biden and Trump raised in the month of June combined. Incredible. The Trump campaign and affiliated political action committees had raised a total of about $757 million by the end of last month. Joe Biden and affiliated groups was $746 million, neck and neck there. In the week since Biden ditched his bid, Harris has pretty much united the Democratic Party behind her, gained some ground against Trump in opinion polls, though I must say over the weekend at a fundraiser, she conceded that Trump remains a favourite in the election, which is now just 100 days away.
Israel's security cabinet has authorised Prime Minister Benjamin Netanyahu's government to decide on the, quote, manner and timing of a response to a rocket strike in the Israeli-occupied Golan Heights that killed 12 teenagers and children.
Israel and the United States blamed the hit on Lebanese armed group Hezbollah, which actually denied it was responsible. It was the deadliest hit on Israeli territory since Palestinian militant group Hamas's October 7 assault sparked the war in Gaza. Israel has vowed retaliation against Hezbollah, and Israeli jets hit targets in southern Lebanon during the day on Sunday. Prime Minister Anthony Albanese yesterday said there's a risk of a far more savage conflict starting in the Middle East following the strike, saying you could see trouble brewing over the weekend. Mr Albanese issued another joint statement with Canadian Prime Minister Justin Trudeau and New Zealand Prime Minister Christopher Luxon, calling for a ceasefire in Gaza.
All right, a change of pace, Sean, something a bit lighter to finish on. Deadpool and Wolverine, a film. Not two separate people, they are together.
They're not real, Michael. They're not real.
I know. It's something, as I was saying, and I put too much emphasis on them separately. Deadpool and Wolverine. I'll say it together. I'll say it quickly. Deadpool and Wolverine looks to have reversed Marvel's box office slump, with the superhero sequel expected to have made about $200 million over the weekend, about the same as Kamala Harris.
Well, that's right. And that's in the US. It was an all-time record for an R-rated movie. Pretty incredible. Marvel deployed two of its most popular characters following a couple of relative duds, and it's expected that Deadpool and Wolverine collected another $238 million overseas. That means about $438 million over 3 days. Not bad. Now, the movie itself cost about $320 million. Nice profit already. Of course, it stars Hugh Jackman, Australia's own Hugh Jackman. 2 years ago, Marvel's Doctor Strange in the Multiverse of Madness made about the same amount on weekend one. Eventually, it made about $1 billion in ticket revenue. Now, having said all that, I had never even heard of Doctor Strange in the Multiverse of Madness, but clearly Marvel isn't. I'm not the target audience for Marvel. But it made $1 billion. It reckons that Deadpool and Wolverine is on track to make something similar. Have you seen it?
No, I haven't. Have you seen the two previous Deadpool movies?
No. Have you?
Yes. They're very good. You clearly are not the target audience at all. Have you seen any of the Marvel movies?
No, I haven't. Everyone, I mean, my household and kids and that just think I'm ridiculous. I mean, I've never seen a Harry Potter movie either, though, I've got to tell you. Not a moviegoer. It's certainly not a Marvel comic moviegoer, but everyone else in my house has.
Every time you say these things, I make a note in a list of things that I call things I'm surprised to learn about Sean Aylmer. And on that list is the fact that you don't like hot chips, which makes you un-Australian. And now you don't like movies in general. And you've never seen Harry Potter. Have you at least read Harry Potter?
Maybe. I think I read the first book. And it's just not The Hobbit. I'm sorry. I mean, and again, this is a generational thing probably, but, you know, for me, the Hobbit and the trilogy was sort of the great fantasy book for my generation.
I honestly don't know what to say. I was going to ask you about the fact that this was an all-time record for Deadpool and Wolverine, an all-time record for an R-rated movie. Because don't you kind of assume as soon as I know it's R-rated for violence and stuff, and that's a US R rating. As soon as you hear R-rated movie, don't you automatically think something else?
Not anymore. Maybe I did when I was growing up because R-rated was, whoa.
Yeah.
You have to sneak in to get see that.
Yeah, something else altogether. In which case I'm like, $200 million out of an R-rated movie. Cripes.
Cripes. There's a word we need to bring back.
It's getting hot in here. All right, up next, Sean, is the Fear and Greed Daily Interview. Niall O'Sullivan from Mercer is your guest today.
Yeah, we talk about the geopolitical atmosphere at the moment, particularly with all these elections going on in populous nations, the big one, of course, later in the year being the US election, and what that means for investors. Fascinating chat.
Yeah, it certainly is. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you can sign up for our free weekly newsletter out tomorrow, and keep an eye on your playlist around midday today for the next episode, the bonus episode of Ask Fear and Greed. Thank you, Sean.
Thank you, Michael.
It is Tuesday, the 30th of July, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.